So here we are now at the whiteboard. We're going to talk about the first secret, which is how to make a full-time living in under 90 minutes per day with our trading strategies. Your main problem probably in your life right now is you're probably working a lot for a small output. You're not making very much money for the amount of time that you're putting in. And with day trading, the coolest thing about it is that you can put in a very small input to get a pretty high output, probably higher than most. I don't know. I'm not sure what else is higher than this input versus output. So what is our goal as day traders utilizing this strategy? It's to make $200 to $2,000 per day in under 90 minutes. Now, obviously, everyone starts at different levels in their career as a day trader, depending on how much capital they have to start with, which is why there's kind of a big range here between $200 to $2,000 per day. Now, that doesn't mean that you can't have a $2,000 day with a small account at all. You can have big days as well, but that's kind of the range that we're shooting for. Now, everybody, just like you saw with me, I started with a small account as well, and I built up to, six-figure accounts later in my career. So hopefully that's where you end up as well. The potential here, though, is to have $5,000, $10,000, even $15,000 plus days. I've seen a trader make $1 million on a trade before. So there's literally no limit or ceiling on the potential that you can make as a day trader in these small windows. Obviously, it matters how much money you're trading with, but there's a pretty high range compared to probably what you're doing right now, from $200 to $2,000 per day in under 90 minutes per day that you only have to work. So how exactly are we going to accomplish these goals or potentials that we're trying to work with? One, we first need to focus on a niche strategy. That's kind of breaking things down into a smaller sector and becoming a master at it. So obviously, what do we trade? We trade the US stock market. We don't trade Forex. We don't trade Bitcoin. We don't trade options. So let's make that clear right now. And we also trade small cap stocks between 50 cents to about $15 per share. Why? Because this is typically where we see the highest percentage returns in a short amount of time based off of news coming out. There's always action in this market sector. Now, if you're looking at like Apple, Netflix, Yahoo, or any of these bigger stocks, they're not going to be making as big of moves. And to take a big profit on it, you need a crap load of capital. So with small cap stocks, you can use a small amount of capital and get high percentage returns. And that's why we focus on small cap stocks. Now, the strategy that we use is technical analysis, but technical analysis is a pretty broad range of ideas that you can use. Now, it's very good to understand the baseline knowledge of technical analysis, which I'll get into in a moment, but within the study of technical analysis, you need an edge. An edge basically means having your own little niche strategy that's working for you and has worked for other people within technical analysis. So you need to look at what's going on in technical analysis, and that's kind of how I found my edge in the market, which started with FOUS4, which was pre-2008 market crash, FOUS4 Part 2, which is when I started day trading and had that edge, and FOUS4 Part 3, which is when I started shorting and had that edge. So we're going to go over these three edges that I found in the market using these strategies to make money in small cap stocks. So first off, guys, I want to give you a basic rundown of technical analysis and what it actually means, what is the concept behind it, and what's the theory behind it. Now, technical analysis is essentially based off of four different things: support, resistance, breakouts, and breakdowns. And it's also based on the theory of supply and demand. Now, this works because long time ago, people started to realize that there was repetition in the markets based off of different patterns, which became the theory and the strategy of technical analysis, because you could actually look at price action in the past, look at that it kept having all these repetitive patterns, then actually use that potentially to predict or react to certain situations in the future to make money off of it. So that's basically how technical analysis works. And to give you a little ideology of what it looks like on a chart pattern, now we have resistance, where there's actually more supply than demand. So that the stock reaches a level where there's more supply than demand, and it starts turning down. Then there's support, where there's more demand of buyers than there is supply. Now, if you have 2 points on a dip in a stock, you can draw a line of support. Now, this means that this is an area where there's probably in the future going to be more demand than supply. So you might see this stock come down again to this level and potentially bounce off this level. So that could maybe potentially either be a buy, or if you're, looking for it to break down, it might break down and you might want to get out of that position because it broke down that channel. So that's basically how it is. Support and resistance, all based off of supply and demand. And if you have more than 2 points, that's when you can connect a line, or a trend line we call it, of being able to predict what might be happening in the future. Now, breakouts and breakdowns, this would occur, say if you were looking at this stock and you potentially wanted to buy this on a breakout pattern. That would mean you would want to see the stock come somewhere up here, and then if it breaks out over this line, then we will extend here. This would be a potential buy signal to break out. And that would basically finally get past this range that has been stuck in. The amount of buyers overcame the amount of resistance here, and you're also probably going to see a big spike in buy volume on your chart pattern, and that would be considered a breakout. Now, a breakdown would be the exact same situation, but on the opposite side, which is when you would actually, get rid of these lines, see this stock potentially come down and then break down that level of support. So that would be what we consider a breakdown. So that's basically all technical analysis is the study of being able to find channels of a stock based off of support and resistance, which is also at a smaller level based off of supply and demand. And then we can look at the repetition of that happening to potentially either buy a breakout or sell a breakdown with our strategy. So that's kind of, in a nutshell, how technical analysis works. Now, technical analysis is a very widely known topic, and when you just read a book on technical analysis, like I did many, many years ago, there wasn't really much of an edge to trading this strategy based off of this theory of technical analysis. So I had to find an edge in the market to make myself unique in the marketplace so that I could take advantage of other people who are all looking at the same exact thing. That's basically what having an edge means, is having the edge over someone else who is trading. Now, if you're reading any book on technical analysis, all they're going to show you is what's happening in this range, which is between here and here, and they might be showing you a stock which is called an ascending triangle breakout pattern. Now, this is the ascending triangle breakout pattern was kind of my go-to swing trading strategy, and it still happens a lot here today. But just understanding this pattern, there was no edge there. Everybody knew what a ascending triangle breakout pattern was. So I was looking at these patterns over and over again, and just thinking like, okay, what's different about some of these breakout patterns versus the others? And what I started looking at was not what was happening here during the actual formation of the breakout pattern, but I started focusing on what was happening previous to the breakout pattern. And now these were pre-existing conditions that happened in the previous history of the chart pattern that led into this actual breakout pattern. So this is what I called a lead-in pattern. And I came up with 4 different patterns that I found to be consistently repeating itself that kind of determined how strong this might be, this actual breakout pattern over here. And this was called the revival, survival, force, and gold pattern. And this is what gave me an edge early on in my career as a swing trader and to find some of the best stock picks out there. This is why I was known as one of the best stock pickers on the internet for big swing trading strategies. Now, this is also swing trading. Now, we're talking about making money in under 90 minutes. This doesn't mean that these patterns don't exist. Some of my biggest trades and biggest percentage gains all come from understanding the longer term scale of these patterns. And what I did was started to utilize these patterns and then combine them when I looked at a different time frame from would be a daily chart. Daily. And then on FOUS4 Part 2, I started looking at minute charts. And once I combined 2 of the patterns together, that's when you would find some really, really powerful patterns that you can make in a smaller time frame within the first 90 minutes of the day. But understanding that there was these huge, significant pre-existing conditions that led to the breakouts on the daily chart prior to these just the generic breakout patterns that you're going to read about in a book. Nobody was talking about what was happening before. And that's what gave me an edge in the market, and which is why my FOUS4 original training program was so popular and did so well. So that's kind of the understanding of you have to know what this is. And also you have to have an edge. And what gave me an edge over everybody else was understanding the pre-existing condition that led into the actual chart pattern, which is you're going to learn about in FOUS4 is the revival, survival, force, and gold pattern.